You don't think we're going to have this massive whoosh down? We are oversold, though. No, are we close to the bottom, do you think?
For some things, absolutely, and so that's sort of the point, which is this bear market didn't start 2 months ago. It started really about a year ago as asset markets started topping one by one, and we've made a lot of progress in that regard. And oh, by the way, the Fed's next move probably is going to be something more dovish, right? So even their policy is changing now. We look at a lot of different things. I would tell you that growth has been the other concern we've had, not just financial conditions tightening. That peaked in the second quarter of this year. By our estimates, we think the global economy is actually going to bottom, okay, in the first or second quarter of next year. Once again, markets are discounting machines, okay? I think it's very interesting. Emerging markets have outperformed the S&P now for 2 months, okay? So if things are so bad, why would that be happening? I think what's going on now is we got to sift through. The market has to, or investors have to decide, okay, where they want to start putting capital at risk again. And it's going to be slow because there's been a lot of damage. It's going to take a little time to heal. Something we talked about back in October. The difference between the sell-off in October and the one in February is that the 200-day moving average completely broke. We totally took that out technically, and it rolled over. And whenever that happens, it takes quarters, not weeks, not days, not months, quarters to reestablish itself.
Death cross.
Yeah, I don't worry about that
50-day
so
cross,
much.
the 200-day, all that.
I
mean, the technical signs were negative.
Exactly. Exactly. And so, but that's good. That means now there's damage, and people are aware of the two-way risk that Steve pointed out, which is correct. And so the Fed, that's another part of the Fed's job. Let's sort of re-enter two-way risk into the marketplace that's been missing. And quite frankly, if you think about it, right, the market has taken this tightening in QT, pretty well, right? We've had an 8-year raging bull market, okay? And if you're telling me we had an 8-year raging bull market and the penalty for that is a 15% correction, I'm in. Sign me up, okay? And we've said this now for over a year. We think we're in a 2 or 3 year consolidation, right? The 2,400 to 3,000 range, and we could be stuck in that for a year or two. I think the more interesting thing to be thinking about now, what's going to be the new leadership groups? And we're pretty convinced that we are seeing a rotation from growth towards value, and we're going to see a rotation from the United States towards international markets, which is going to be accompanied by a weaker dollar. So the other thing I want to point out that happened overnight was that the dollar topped overnight, which is kind of interesting because you would think that a more hawkish Fed relative to expectations would cause the dollar to go up. We think the dollar's topping, and it's a significant top, and that's going to cause capital to move out of what's been a very trending market in certain areas.